Hi, and welcome to the Exports Unlocked Weekly Trade Intelligence Briefing. We're going to be covering a few topics today, so we'll go straight into it. Very important. This week covers live trade intelligence, what we're seeing in the marketplace. So we're seeing China manufacturing slowdown, Red Sea and freight routes updated, industrial product signals, Saudi investment and Vision 2030. We're going to have a look at the food and commodity markets and trade intelligence opportunities. That's what we're seeing, and we know there's some signals, global signals, what we're seeing this week. Again, on the dashboard, we're seeing energy markets obviously elevated, freight networks disrupted, supply chain strategy it's active. So energy markets, we're watching oil prices sensitivity, freight networks, we're watching Red Sea diversions and transit reliability. Supply chains, we're watching the supply diversification, and business impacts, landing costs, as we know, longer lead times, supply risk, inventory requirements, and margin exposure. So we know there's a lot of challenges there in the marketplace. What we're saying is the most resilient supply chains 2026, and not the fastest, they're the most adaptable. It's all about adaptability, as we're seeing in the marketplace. Great market snapshot. So again, we're looking at 2024 to 2000 and to current, and the changes what have been there. So again, we went back a couple of years because we wanted to give it a bit rather than just doing 2025. But we're certainly seeing a trend upwards in China, UK, India, UK. We're seeing kind of it leveling out, but it's still on the increase. Saudi, UK, again, up, depending on where you go. US, UK, I think quite a big increase there. China air freight, that's gone up quite a lot if you look at the percentages. We're seeing key market drivers in that, the Red Sea diversions, energy costs, manufacturing demand, and geopolitical disruption. Who would ever thought we'd be talking geopolitical in 2026? But it's the big thing. Freight rates remain well below pandemic peaks, but route disruption continues, creating cost volatility. Again, what we're trying to say then is that yes, you might get it cheaper, but it might take a lot longer. Obviously, transits are getting longer and longer. That just-in-time module has certainly disappeared for the time being. Customs watch, what we're seeing indicators, imports growing, exports uneven, customs scrutiny increasing. We're seeing a lot more customs now. Gulf opportunities strong, cost pressure persistent. So again, customs compliance, origin evidence scrutiny, growth we're seeing in Saudi Arabia, Asian opportunities, trade performance, export, competitive manufacturing activity. So again, growth markets, what we're monitoring at the moment, Saudi, UAE, Asian, India. UK's strongest exports are critical combining compliance excellence with market diversification. What we're saying is get your paperwork, get everything right. These are some of the good opportunities we're seeing in the market. Customs intelligent watch, again, what we're seeing, where business space, and this is what we're seeing on our intelligence hub. We're scouring the market, we're looking at things and we're trying to score it now to make it easier to understand. So risk area origin evidence is quite high. So again, if you are using UK origin or other origins, make sure you've got proof of how you've created that origin. Commodity classifications, medium, but again, we're still seeing challenges there. A lot of people are not understanding that HS code to your national code, from your 8 digits to your 10 digits. Again, if you're exporting, it causes many issues. Customs valuation, the moment is quite high. There seems to be a lot of talk on valuation. And what I mean by that is how you are valuating your invoices, etc., when you're doing a customs entry, making sure it's the invoice value that you're using. And then on top of that, you'll have your CIF cost for carriage, insurance, and freight. Very important. Again, free trade agreements claims are moderate, and supply declarations medium. They're the kind of key areas we're seeing in the dashboard at the moment when we're scouring. Origin documents weak, supply declarations continue creating retrospective duty exposure. We just assume that when we're buying it from or we're bringing raw material in, it's correct. Again, you've got to scrutinize that and find out exactly what your supply chain exposure is, and getting your supplies declaration is critical. Commodity classification, again, checking your classifications. It's an old age thing that has been around for centuries and forever, particularly in the last probably 30, 40 years. We're starting to see a lot of challenges there. So again, checking your commodity scores is really important. And customs valuation, freight assist, transfer price adjustments remain key audit focus points. So again, they're the key things that we're seeing at the moment. White matters, duty underpayments, retrospective assessments, audits, delay shipments, and margin erosion. Again, most customs liabilities originate before shipment. Strong controls that supplier onboarding and product setup often prevent the largest future exposures. That's what we see, and that's what we're trying to highlight today. AI data and in trade intelligence, how businesses are using intelligence to make better trade decisions. which markets are showing opportunities, which suppliers increase risk, which products face tariff exposure, which routes increase landing cost. What AI supports is that market monitoring, customs visibility, supply chain exposure, landing cost, decision intelligence. So when we built our trade intelligence, we didn't build it to put into the market. I think this is where there's a lot of confusion. We didn't create all the back end and all the tools that we've created to then just suddenly put it as a platform. That gets very confusing to use. We keep it in the background and we get the information, if you get Excel or anything else and you're not sure about your data, because that's the hidden fact. You know your data, you've got the data, but how do you extract that? That's what we do. We extract it and make it into a visible product that you can then look at the data and make them key decisions on the areas that I've just mentioned here. That's what the whole point of the AI technology is. Again, competitive advantage shift, reactive operations, data, the visibility, predictive decisions, faster execution. The strongest is increasing combined AI data, trade, human expertise to identify risk. So we're not saying that AI is going to be replaced. We're saying you should be using AI in the correct manner and making the prompt so you know exactly what you're asking it and it understands what data you require to make it a lot easier as you expand or you import independent. Again, data snapshots, US manufacturing and tariffs, policy and tariffs debates continue, shaping source and investment plans, watch industrial policy reassuring, activity in trade, enforcement that's very active. Saudi Investment Vision 2000 projects are driving logistics, watch logistics zones. We're seeing manufacturing growth, foreign investment. Again, that's a positive sign. China export activities, always one to watch. Exports remain a major influence on freight demand and global supply chains. Again, what we're saying, watch manufacturing output, export volumes, trade tensions. Again, it's mixed at the moment. Emerging markets, businesses are exploding, different markets in India, Asian, African, Gulf markets are diversification. Again, watch new market demand, regional trade agreements, supply chain shifts, opportunity, particularly with the GCC agreement recently. And again, what's the trade intelligence signals worth watching? Manufacturing activity, the freight demand, industrial investment, market diversification, and trade policy changes. Again, what we're saying is trade growth increasingly follows investment, infrastructure and industrial expansion rather than traditional markets. So again, start looking at these markets. We're seeing the growth markets, particularly, as you're saying, these emerging markets and also at the Saudi opportunity. So it could be some good opportunities for you there. Again, History Trade podcast. We've got our latest podcast that we do on a Monday, Wednesday and a Friday, but every Sunday, every couple of weeks, we do the history one, and we've done one on Rome built. Well, I enjoyed delivering this because a lot of study went into this and a lot of practicalities of what's really not changed. And when we talk AI and other things, it's just an evolvement of things evolve over the years, and now AI is one of them evolvements throughout history. So again, we'll be infrastructure drives trade, ports create growth, customs generate revenue. We was doing customs in even the Rome days, so it's very interesting. Boot security builds confidence, predictability, taxation, incredible in it. So podcast insight, woman's greatest advantage wasn't military, it was ability to move goods. Watch it. It's about 20 minutes long maximum, but it'll really give you a good insight, and it's there if you want to watch it. It's very interesting. What we're saying in the next 7 days, again, US tariffs, we're watching, it's active, it's challenging. Red Sea, obviously, freight, we're seeing it a bit more elevated, so again, to watch that. CBAM and sustainability, we're hearing all the noise and all the talk. I'm still not a big lover of this carbon border adjustment mechanism sustainability. I think I just think, in a global marketplace, you put in a real obstacle in a way that doesn't allow growth to grow like it should do when you put in so many things in its place. And certainly that's what we're seeing. And we see a lot of protection within that. We're certainly seeing it in the US, and we're certainly seeing it with the EU. So when the EU complain about the US, maybe look at themselves when we talk about CBAM. Saudi are changing, and the growth now is very much on projects and industrial growth. That's when they want to increase in ports and other areas. So again, we're seeing a positive sign there. AI infrastructure, again, demand on AI investment. So we're seeing obviously semiconductors and all around there as a strong indicator, and some interesting figures which I'll share with you in the next couple of weeks about where we see AI going. Currency markets, watch exchange rates, movement affecting landing costs. Again, it's volatile, goes a bit up and down. Questions, smart exporters ask, where's my hidden cost? Which markets offers the strongest growth as supplies to concentrate? And what could impact margins next? I'll just put that on there just as a key factor to look at. And then strong exporters monitor change early. Competitive habit often comes from acting before disruption. It's all we try and do. We try and be ahead of the game, but it's very difficult because we're advising. We're not kind of doing the manufacturing, I think. So it's difficult, but with monitoring everything and seeing what's around it, it's pretty important to be checking that. So again, that's what we see in the weekly trade. Every Wednesday, again, we'll be doing the same thing next Wednesday. We'll be looking at the market, see what's shifting, where we're seeing the opportunities, and we'll keep you up to date. So please tune in, keep watching, and thanks for joining us and thanks for joining. And again, just make some comments or again subscribe. That's all we're asking. Asking for more subscribers, then we can build this out to a bigger audience. Thanks very much.